Eric Mwather with Mwather.com. Weekend analysis for the weekend of February 14th and February 15th, 2015. Let's take a look at market action on Friday. We see that the Dow closed up 0.26, Nasdaq was up the most, 0.75, S&P 500 was up 0.41, gold was up 0.64. We see that crude oil was up 2.8. We see that the VIX was down about 4%. For the week, we see that the S&P 500 was up 2%. The Dow was up 1%. And the Nasdaq was up the most, about 3%. And also more important, the fact that it closed close to 4,900. So that's how the market settled out for the week. Let's take a look at the weekly charts, see what they look like. We begin by taking a look at the Nasdaq weekly. We can see that this was a very nice week, blasting above the previous weekly closing high of 4806.86. So that's a very nice breakout on the way to new 13-year highs, which means that there's really very tough to call this some type of a bearish action. Yes, the market can still go down. Nothing is stopping the market from going down, but once you see a breakout, you really have to respect the potential for upside. If we take a look at the RSI on the Nasdaq, we see that we are still trading underneath this line connecting the previous highs, and one can argue that we've come close enough for this to be resistance, but that's really stretching it. The key here is the fact that the market held the previous lows going back about 3 weeks ago. The market came back and held with a double bottom support here on the weekly, which was based on the previous lows, connecting the previous RSI lows, and which gave these lows here for a nice entry. You got uniform activity below the line, back above it, nice entry there. We were also talking about the fact that the market held above the 50, and ever since the market moved above 50 here in 2012 on the weekly time frame, every time the market has come and recaptured the level above 50, the market has gone on to record higher highs. And so we see that this is exactly what happened here in the last couple of weeks, that the market did come close to the 50, it held, and we can see that it is now recording new weekly closing highs. So yes, it is very plausible and likely that eventually we find resistance on this RSI line, but until we see it, that would only be trying to guess where that resistance is going to be seen. If you take a look at the daily for the Nasdaq, we can see that we are solidly above the previous daily closing high. So that's a fresh 2-3 week move above the prior daily closing high. We see that the market did move above the wedge that we had been discussing. So there was a wedge here that was forming. The market eventually took the decision of moving above that wedge, and that's why we are seeing this accelerated price. Now remember, if you go back a couple of weeks, we held support here on the Nasdaq. After it was initial breakout, the market came back to the same level. So the market did move above that, came and bounced on the level again, came here, bounced on it again, and here bounced on it before now recording this high. So that level has been tested a couple of times and it has held. So that set the backdrop for basically the market trading in this sideways action for a couple of weeks there, a couple of months, and finally we see this week blasting and moving above that range. So it makes sense that after a period of rest, now the market is moving higher. Now on the daily for the Nasdaq, we can see that it is very likely that if we take this break point, now this break point is what gave us this high here, and draw a simple line, something like that. You can see that if the market does not move above this line, then maybe we can look back and we can conclude that this move here was some type of a trap, this move here. but that is really stretching it. For now, you have to play the upside and the potential for a continued move until you see evidence of the exact opposite. So yes, I can see that is if we look back maybe a week from now, 2 weeks from now, maybe this is where the market was going to stall anyway. So this is an interesting point. Keep in mind, we are going into an options expiration week. So if we stall here at the beginning of the week and can't move above that, my thinking would be that is going to be setting up for negative divergence, which would probably suggest that the market could have a little bit of a tough going after recording that nice close. If you take a look at the hourly, the Nasdaq did close with the RSI above 69.1, trading with the RSI at about close to 80. That suggests that it's very strong. So this RSI being at this level here does tell me that even hour to hour the market is very strong. It's going to take a lot of energy, a lot of work, and some time to turn the markets down. That hourly chart looks very strong. We take a look at the monthly, long-term monthly view for the Nasdaq, and we are getting ever close to that 5,300 high of March 2000. And we are also right now trading above the prior monthly closing highs of 2000, and that is at 46.96. So as long as the market is holding above that, we look at this as being a very good market. Again, this is a 20-year monthly chart. We see that we continue holding above 69.1 on the monthly. That's a very strong market also. Take a look at the Dow now on a weekly chart, and over the course of this week we've been discussing the fact that ever since late 2011 the market has been using the 50 level on the weekly RSI for entry during every pullback. The market has been using the 50 for a nice support, and the market goes on to record newer highs every time. And we can see that over the last couple of weeks we did the same thing. We came here to the 50 and held, and the thinking was that if the market can bounce back above 50 about 3 weeks ago, the market could have 2 weeks ago, the market could have a good run, and that was a nice entry there. Keep in mind at the time we had come back to the previous highs. So after moving above that level, we came back a couple of times just like we did on the Nasdaq, and we held. So the fact that the Dow did not, as of right now, close above the previous weekly closing high could also suggest that maybe the Dow also has to peg new highs before we can look for sell signals. More often than not, when one market makes new highs, most of the major markets around it do go on to record new highs. So the fact that the Dow did not close at new highs suggests that it could easily also go on to record its own weekly closing highs. The level to watch is 18,053.71, which is the previous December, or I guess about late 2014 weekly closing highs. It needs to be above that if this is a great breakout, or if this is going to lead to another push to the upside as new buyers come in as they play the breakout above 18,053. We can also see that on the MACD, on the short-term MACD, we are now moving back above 50 on the weekly time frame, which could explain the recent bounce. Over the last couple of years, every time we have uniform activity below zero and back above it, the market does bounce. So that's another also level of indication of momentum to the upside. Uniform activity below zero, back above zero, indication of change in momentum back to the upside. You got this nice V-type formation, nice entry there, another uniform activity below zero, back above it, another nice market low there. So the fact that we did this the last couple of weeks, went below zero, back above zero with uniform activity, indicates that momentum is to the upside. Take a look at the Dow daily, and the Dow just did not close at new daily closing highs, but it could still go on to do so. So we need to watch that to see whether the Dow can move above the previous daily closing high, and the level to watch there is 18,053.71, again the previous daily closing high. Now if you take a look at the Dow from a daily standpoint on the RSI, we see that there's a line we've been drawing. So this line here, which was the previous resistance a couple of during the entire 2014 period, and gave us a sell signal recently here at the highs. So that line gave us a sell signal there, and now we are back to the line extension. Let me draw that in a different color so we can see it clearly. And so I'm talking about this line here. Recently was resistance here, gave us a nice high, and if you paid attention to that, you saw this drop coming, most recent drop. If you extend the same line, you can see it's exactly where the Dow closed on Friday. So it will not surprise me that this becomes resistance, and maybe the Dow finds it difficult to close above the previous daily closing high of 18,053. If the Dow can climb above resistance there, above the blue line, maybe there's more upside. Right now, closing on the exact resistance level could suggest that the market could struggle at the beginning of this coming week. We take a look at the hourly, and on the hourly for the Dow, you can see evidence on the RSI. If you draw the line connecting the highs, you can see that it connects precisely at this line here, which gave us the high, and now we seem to have formed the double top. Very simply put, if we cannot move above that line, then the market does start to trickle lower. But if we can trade above the blue line, then maybe there is more upside. So it's a very simple analysis here. You watch the market, the more it stays underneath this top lines resistance here, which happens to be another line of resistance drawn that way. Keep in mind that this was uniform activity above the blue line, back below it gave you that high. We haven't moved above that high on the Dow, and now we are looking at resistance on the hourly. Keep in mind, S&P 500 had the same type of hourly resistance early on the week, but by the end of the week it managed to move above that. So for the Dow to do well, it also needs to jump above those two lines. Otherwise, if this is resistance, then we look for this to show us that price is eventually gonna have to come down. We'll take a look now at the Dow Transports from a 2-year weekly, and the Dow Transports also did not break out to new highs, but you can take a look at action back at the 50 level. Has been very good ever since this breakout here during this move beginning of 2012, beginning of 2013, late 2012. There was a breakout on the RSI there. Since then, the market has been bouncing on the 50 successfully with nice entries. Again, here bounced on the 50, nice entry, and you can see the last 2 weeks it bounced on the 50 with a nice entry, and every time it did bounce on the 50, it went on to new highs, went on to new highs, went on to new highs. So if we are going to remain neutral, we can see that the analysis here indicates that more than likely Dow Transports are also going to go to new highs, which means the markets are going to be very favorable. We take a look at the MACDs. We can see that the small time frame MACD is now back above zero. Every time it's been coming below zero, back above zero with uniform activity, it's been showing nice movement to new highs. Now, if you take a look at the Dow Transports daily, you can see that there's a lot of work that needs to be done here because it's back to the resistance line on the daily. It needs to be above this line if it's going to do well. Otherwise, if this becomes resistance, maybe it pulls back before deciding whether to go higher or not. Take a look at the transports from an hourly view, and on the hourly chart we see that this is a line of resistance connecting the highs, just like the Dow. If you take the highs, draw a straight line, this is where it's finding resistance. Also happens to be a level where it's been finding resistance during this high here, this high here, and also during this high. So for it to do well, Dow Transports needs to be above those two lines. Otherwise, this is suggesting that we might have a down week, or at least resistance beginning of the week. And especially keep in mind that with that options expiration, maybe the market does exactly what nobody's expecting, which is a strong pullback in the coming week. Now if we take a look at the S&P 500 weekly, we can see that yes, it closed above the prior weekly closing high of 2088.77, but the RSI closed back at the resistance line. If you draw it connecting the most recent lows, something like that, back to that general territory. So I'm not sure what this means. I'll be honest with you. This could be a stall point, but then again, if you draw the line a little bit connecting the main highs, it's not back to that line, but it is close enough to where if it starts stalling around here, if the price goes down around here, which after making a higher high, so higher high in price, and if the RSI stalls around here, then that's going to be another negative divergence, suggesting a pullback could be in play. S&P 500 daily, you can see that we finally moved above the previous wedge. There was a wedge here that we discussed, I believe, last weekend, and the conclusion was that if we move above this wedge, we're going to have a strong move higher. If we move below the wedge, we have a strong move lower. Of course, we know that the market chose to go above the wedge, which might explain why it is having a strong daily showing, closing at fresh daily closing highs. And so we can conclude that as long as the S&P 500 is holding above 2090.57, which is the prior daily closing highs, then this should be a strong market. But it does need to stay and hold above 2990.57. If it moves back below that, then that would suggest a failed breakout, which would start asking questions about the strength of the market. So it needs to hold above that prior daily closing high. Now, quick look at the S&P 500 hourly, and the level we were watching throughout the week was this level here, as the market had come back and was seemingly showing resistance at some point back at this line here. And if we take that off, so there were two lines that we've been watching the last couple of weeks, this line here and this line connecting the highs. And you can see that every time we had come back to that line and showed resistance, the market did pull back hour to hour. Even here there was a pullback, and also here those resistance, which gave us the main high. So early in the week we were thinking this could be resistance, but the market actually eventually jumped above those two lines. And so this is now opening the possibility of higher prices, because the market is trading exactly where it should if the bulls are in control. And yes, the market closing above 69.1 on the hourly RSI, indicating a lot of strength is still inbuilt in the market. Let's take a look at the Canadian market, and we take a look at the weekly. We can see at the close of the week, Canadian market was above recent weekly closing highs of 15115.08, and as long as it's holding above that, then maybe there's momentum to the upside. We see that now the coiling or bullish coiling of the 13-week moving average crossing above the 34-week moving average. So as long as this is the case, without knowing what the future brings, we have to start concluding that more than likely this crossover here is actually predicting that the market eventually goes higher week to week. Now keep in mind that the RSI is still back at a level of resistance. The most recent resistance on this line here on the RSI came during these highs, and we got a relatively serious drop after that resistance here, as the market would plunge here for a couple of weeks. So now coming back to this level on the weekly could suggest, if we stall in the new week, that this is as high as it goes. But the key here is if it can hold above 15115.08, maybe there's more upside. If it moves back below that with a failed breakout, then this is actually suggesting that the RSI would have shown resistance also, and the price would have also have failed if it moves back below that prior weekly closing low. So the level to watch is 15115.08. Anything above that is bullish. We come and take a look at the daily for the Canadian market, and we can see that we had come back to our prior level of resistance, which had given us the high on the RSI there. So that gave us the setup that came off the highs before, and we had come back to the same level a couple of weeks back here, which gave us this short-term high and this drop. And so it looked like during the week this was going to be resistance this past week, but eventually the market did climb above that blue line. And so as long as it's holding above that blue line, and also you can see that there's a slight price breakout above the prior intraday highs of late November, that this is now looking like it's a sign of a breakout. So we'll see what happens. I guess the best thing to conclude here is that if you can hold above this line here, the bulls are in control. Otherwise, if it moves back below the line with uniform activity, then this could also easily be a trap. But the close was a good close because it's above the line of resistance there, and it's also above the prior intraday highs of late November. Now a quick look at the Canadian market on the hourly. We can see that a break of this RSI level, that break there is what gave us the level of the highs, and a simple straight line like that gives you a lot of information because it tells you every time we come above this and show resistance, you get a short-term hourly high before a drop. In this instant was a big drop. You come here, you show resistance again, short-term high. You have this short-term move above that line and back below it, which is a sell signal here for a short-term move. And now we are seemingly showing resistance back at that line. So it's tough to tell hour to hour. It doesn't look that bad because it's above this line here, and so as long as it's holding above that weekly price of 15,115, then this looks okay. But there's some trap here looking seemingly on the hourly. So maybe we begin the week down, but we shall see. The key here is just on the weekly to keep it simple. Anything about this prior weekly closing high looks like it's trying to build after having a very volatile couple of months here. We take one quick look at Apple here. It is now back above the prior monthly closing high, and the level there to have watched was actually 118.46. Once it jumped above that after some struggles early in the late last month, we can see that the RSI has now reclaimed the level above 69.1. So this one looks good. Momentum is to the upside. All it needs to do is defend this 69.1 level on the monthly, and who knows how high it can go. But momentum also looks great there. Now, same thing on the weekly. You can see it's back above 69.1 again, and the last couple of times it's been trading above 69.1. It's had a nice run like it did during this time here. Nice run. It stayed above 69.1 during this phase for a nice move again. You can see nice entry here above 69.1 and stayed above that till this level. And now we can see that it broke out to new weekly closing highs. So here, I hate to say it, but honestly, the sky's the limit. If we take a look at where we were seeing resistance, that's the daily. The daily looks good. If you remember the daily, we had talked about when the stock had come here, that if you draw a line connecting the lows like that, connecting this low and this low, gave you all these support zones on the stock. And so this is where it came down most recently and held, and after that it did generate enough momentum to go to the upside. Even the hourly resistance that we were talking about last weekend, so the last weekend the stock was trading somewhere around here, but we can see what happened during the week. It finally managed to climb above that line of resistance, which might explain this nice 6-point gain. So it looks good, especially on the monthly. The stock looks good as it trades above prior monthly closing highs of 118.46. Now I'd like here to conclude part 1 of the video by taking a look at the monthly chart. You can see that now the Dow is breaking out on the monthly above the prior monthly closing high, and as long as the Dow is trading above 17, I believe 17,828.24, then this is a fresh breakout and the market could actually have a chance of moving higher. RSI is now reclaiming above 69.1, so this is a very scary market in terms of upside momentum. Of course, if the market cracks below that price range, maybe this is for naught, but for now, the way it did close on that Friday, it looks great. You take a look at the Nasdaq, and from a monthly view, you can see this is another monthly breakout. I mean, a very strong monthly breakout, and the level to watch there for the Nasdaq is 4791.63. As long as it's holding above that, and as long as the RSI is holding above 69.1, this is a scary market, very bullish. Conclude here with the S&P 500, and we can see that it is also above the prior monthly closing high, so this breakout is now in play, and the level there to watch is 2067.56. The more it stays above that, the more it remains strong. RSI is back above 69.1, something it's been doing, holding above 69.1 for the most part since March of 2013, somewhere in that region. So we are reclaiming back above 69.1. If it moves back below 20.67, maybe there's reason for this to call this a failed breakout. But for now, let's take what we see, what is in front of us, that this is a breakout above the prior monthly closing highs after 2 months of rest. So the market here can actually continue recording new highs. For subscribers, I'm going to have part 2 ready for you guys sometime before the trading on Tuesday. I'll send an email when part 2 is ready. Eric Moade, good luck, peace, and blessing. Mwah. Woo!